Hey, welcome back to YT Finance, and today we are talking about PLTR stock and if Palantir stock is worth buying. We will be comparing Palantir Technologies to other data analytics companies to see how they compare. Then we will perform some analysis on PLTR stock to see if it's overdue for a breakout. After that, we will discuss what analysts think of Palantir stock and what price predictions and price targets they have for it. Then lastly, we will conclude if Palantir stock is a good short-term, medium-term, or long-term hold. As always, my research is linked in the description down below, including the more in-depth articles that I use so you can fact check me. But right now, go and press the like button for more stock news and analysis. Comment your thoughts down below on PLTR stock. Turn on subscription notifications if you are new, but first let's make you some free money with Webull. Webull is a free brokerage app where you can buy and sell stocks, options, and cryptocurrencies. But right now, you can get 2 free stocks with Webull. You can get the first free stock, which can be worth anywhere from $2 to $250 for just creating an account, and you can get a second free stock which can be worth up to $1,600 if you invest $100 or more on your first deposit. You will have a 1 in 100 chance of getting stocks like Facebook, Starbucks, or Snapchat, and you have a 1 in 50 chance of getting stocks like Google or Procter & Gamble. To get this offer, just press on the link in my description box down below, but do it quickly because this offer will not last forever. And without further ado, let's get into today's stories. When I'm looking for the next stock to purchase or put into a watch list, I try to look at the rising relative price strength, and when it comes to PLTR stock, Palantir has increased its relative strength rating from a 77 to an 82. 99 is the best score that a stock can get on this metric, which tracks the stock's price behavior over the last 52 weeks to gauge momentum against other stocks. And over the last 100 years, some of the best stocks of the largest price gains have had an RS rating of over 80, and Palantir now fits this criteria. This is no surprise since PLTR stock had a slight rally after their earnings report where their EPS grew by 500% since last quarter and their revenues increased from 40% to 49%. Palantir now ranks in the top half of computer software enterprise stocks, with higher end stocks in companies like Concentrixs stock, ticker symbol CNXC, and ZenDesk stock, ticker symbol ZEN, for you to do some research on. Palantir stock is currently trying to break through the resistance level of $21.25, which was the old support level from March and April. The reason why this resistance level was formed is because many investors originally bought PLTR stock around that level, so investors have put in sell orders at or around that same price point so they can break even on their investment. This will make it difficult for the stock now to break through that resistance level at this point. However, even during the tech sell-off recently, investors are showing interest in data analytics stocks regarding companies which help organizations make sense of their own data so they can use it advantageously for their own business. The global analytics market is predicted to be worth $132.9 billion by 2026, and it will grow by a compounding annual growth rate of 28.9%. Knowing this, we can now compare Palantir Technologies to Splunk, which are 2 data analytics companies which have a very bright future ahead of them. We will look at what Wall Street analysts think of these 2 stocks and what their price targets are. We will also briefly look at revenues and projected growth rates of these companies to determine if these could be potential buys. Here is a graph regarding Palantir's and Splunk's stock price performance, and so far Palantir has experienced more growth, but as you can see, Palantir is also falling more drastically than Splunk's stock price. If you didn't already know, Palantir has 2 types of data analytics platforms named Gotham and Foundry. Palantir's Gotham platform is used for their government clients, and their Foundry platform is used for their commercial clients. Palantir has around 61% of its revenues coming from government agencies and 39% comes from commercial companies, but this might eventually flip as their Foundry system becomes more widely adopted. Palantir Technologies made over $1 billion last year in revenue, and for their first quarter of 2021 they made $341 million, which is set to increase periodically to where they could make $1.5 billion this year. Palantir's average revenue per customer has increased 29% year over year to $8.1 million. But this growth rate is set to slow as they start to conduct business with smaller companies, which will raise their overall revenues, but it will decrease their revenue per customer. Palantir is also projecting that next quarter they will make $360 million, which is a 43% year-over-year increase, and on top of that, their Apollo software is now operational, which is set to add value to Palantir by expanding their market. Palantir obtains 58% of its revenues from customers in the United States, while they get 42% of their revenues from customers across the globe. Palantir is projected to increase international sales, especially in Europe, later this year, which will just add to their overall revenues. But what do analysts think of PLTR stock? Well, recently, an analyst downgraded Palantir after their earnings report to $28 a share, but they still say that the stock is a buy. Overall, 2 analysts say that it's a buy, 3 say to hold it, and 4 say to sell the stock. The low price prediction comes in at $18. The average price target for PLTR stock comes in at $21.75, and the high price target comes in at $30 a share. And this is all in the next 12 months. However, I think Palantir is worth $50 a share, and if you can get the stock under or around $18, then it's a good buy. Now let's take a look at Palantir's competition, Splunk, ticker symbol SPLK, which is expected to announce its first quarter financial report on June 2nd, and this company provides cloud-based software and analytics services. Palantir has a price-to-earnings ratio of around 17, and Splunk has a PE ratio of around 7, but this comes down to how you personally view PE ratios. A high PE ratio means that people are willing to pay more for earnings, but it also means that investors are willing to invest at a higher price now for the chance of higher future returns. Splunk has also recently acquired Trustar, which is a cloud-native security company which gives them a huge advantage, and on May 18th, an Oppenheimer analyst has a buy ratings for Splunk at $203, which is a 73% upside from where the stock currently resides. Even the average price target of $187.28 provides a great 61.5% return on your investment in a single year. Splunk also has 13 analysts saying to buy the stock and 9 analysts that say to hold it. However, this is where the rubber meets the road, because the main difference between the two stocks is that analysts are skeptical of Palantir, so they are watching and waiting, while on the other hand, Splunk is a great opportunity right now. Splunk has more upside in the next 12 months, but I think Palantir can outpace it in the long run, so it comes down to what type of investor you are to determine which one is better for you. If you want solid returns this year, then Splunk is your winner. However, if you are a long-term investor, buying and holding Palantir could make you more money over the long term, but honestly, both companies are very good with great revenue projections. But what do you all think? Comment your thoughts down below, press the like button right now for more stock news, subscribe if you are new, and I will see all of you in the next YT video.